Hello everyone, my name is Poonam Harjani and I am the project leader of Taxmann's Advisory and Research Support Services. In today's video, I'm going to talk about the recent Gujarat High Court ruling in case of Philitex India. The purpose is that we specifically highlight the challenges that the exporters are currently facing in making their refund claims under GST. I'll be taking you through the specifics of Philitex India's case and its likely implications henceforth. As we know, exports have been zero rated under GST, and one of the options available to exporters is that they make their exports without payment of GST by following the LUT procedure. In such cases, exporters apply for refund of any unutilized credits by following refund procedure given under Section 54 of the CGST Act and Rule 89 of the CGST rules. Now, Rule 89 per se does not specify the requirement for keeping separate records of inputs and input services which are used for making domestic supplies and exports. So the exporters claim their refund based on the ratio of export turnover to total turnover on their net tax credits. The situation becomes complicated when the exporters also have certain specified exports. By specified exports, I mean exports where the exporters have claimed benefit on their procurements under specified exemption notifications, including the merchant exports, the under advance authorizations, etc. For the purposes of this video, I'm calling these exports as specified exports. So, unlike a regular exporter, for an exporter who has both regular exports and specified exports, they have to make their refund computations separately for regular exports under Rule 89.4 and for specified exports under Rule 89.4A or 4B as the case may be. So where does the problem arise? There are two problems here. While Rule 89.4 prescribes a specific formula to compute the refund amount, 89.4A and 4B do not provide any formula. And the calculation of refund under 89.4 is dependent on the calculation of refund under Rule 89.4A and 4B. 89.4A says that the net ITC on which the export turnover to total turnover ratio needs to be applied, that net ITC is to be arrived at after deducting the ITC which is refundable under Rule 89.4A 4B. Also, the proportion for claiming the input tax credit refunds under 89.4, that turnover is also excludes the turnover of specified exports. So while technically under law it's not stated that the exporters will need to maintain separate accounts, by necessary implications, exporters need to maintain separate accounts of input credits that are attributable to specified exports. And in practice, most exporters have not been maintaining these accounts separately. What they've been doing is to apply the refund claims under 89.4 by applying the ratio of export turnover to total turnover to their total input tax credit. Now, this kind of practice was challenged by the department in case of Philitex India, and the refund claim was rejected. When the taxpayer went in appeal, the Joint Commissioner remanded back the matter to the jurisdictional authorities, which compelled the taxpayer to go to Gujarat High Court. And before the High Court, the taxpayer challenged the validity of Rule 89.4B to begin with, and also sought to quash for the Joint Commissioner's order to be quashed. On the point of constitutional validity, in the case of Filatex India, the court has refused to examine that. It did not consider it necessary for the purposes of concluding on that case. At the same time, the High Court acknowledged that that question may arise and may be litigated by taxpayers in another appropriate litigation. Also, the principal commissioner filed a counter affidavit acknowledging that the manufacturers may not be able to submit the details of actual inputs and input services used in final products. However, they are always aware of their standard input-output ratio. And based on that affidavit, the High Court remanded back the matter to the adjudicating authorities. So to summarize, in Gujarat High Court ruling, neither the constitutional validity of Rule 89(4)B has been examined, nor there is any conclusive finding on how the refund needs to be computed under Rule 89(4)B. Now, that means that the matter still remains open to be questioned, and different practices may be applied by different commissionerates based on their best understanding of how the refunds have to be claimed. Now, that could leave the tax exporters under deep agony. And it's important that the CBIC comes in here and they issue a clear guideline of how should the exporters compute their refund claims in case of specified exports. That's all for today. Thank you very much for your patient listening. To know more about our advisory and research support services, do log on to www.taxmann.com/advisory or write to us at sales@taxmann.com. Thank you very much. Have a good day.